Good morning, everybody. Hope you had a wonderful summer weekend. I want to start off today with a email that one of our 5Q advisors sent us, and I want to thank John for letting us share this experience that he's had. So he wrote, "I've struggled with a 21-point checklist since coming to 5Q, in part because I've always struggled with rote memorization, and I totally get that, and in larger part due to my start, quit process due to my memorization frustration, which I get as well. My other struggle was the annuities in general. I came from Dave Ramsey, Susie Orman, Ken Fisher School of Thought that annuities were generally bad investments. Fortunately, I hung in there and I kept attending Monday morning calls and finally sunk in that annuities can benefit my clients in ways that no other investment vehicle can. Even more important than the Monday calls is the 5Q team you've assembled, particularly Jerry, Matt, and Missy. Despite being a low producer, these three have always treated me as if I was a top producer in the company. They've always treated me with respect and have always bent over backward to get me whatever information I needed. So what ties this all together? I'm glad you asked. Matt began working on a case with me in January. The client had less than 100K in AUM with me, and the bulk of his assets was with another advisor. He's at the conservative end of the moderate risk profile. 100% of his retirement funds were at risk. I met with him and we went through part of the 21 points, stressing the need for safe money bucket and the ability to, at some point, to turn a guaranteed income stream if needed. Matt ran several illustrations for me in which I reviewed the client and we determined the SILAC Denali FIA was the best option for him. Then he began ghosting me. Gee, I wonder why. After all I did was present part of the 21-point checklist. This went on for several months before I was able to get him face-to-face again. This time I went through the entire 21-point checklist. Who knew that would work? I didn't do it well enough to get him to leave his current advisor at that point, but I did it well enough to drive a wedge between him and his other advisor, and he revealed that he also had an annuity with another advisor. He provided me a copy of this annuity statement. It turned out to be a qualified variable annuity. Missy and the team ran a Morningstar reports for me, and I concentrated on learning the VA portion of the 21-point checklist. I met with the client yesterday. As I proceeded through the presentation, I could see the anger increasingly build in his face. First, his reason for choosing the annuity was capital preservation, and as an advisor put him into an income product where there's only income basis guaranteed. The VA had lost $35,000 of the original principal. Then he saw how much he was paying to guarantee the income phase. Then I showed him the SILAC illustration, how much more guaranteed income we provided with a smaller income base. Then I told him that as a fiduciary, I couldn't help him with the VA at this time because it was less than 3 years old. I told him that we would review it 3-year anniversary date and see if there was a better option for him at that point. Then I told him I would help him with an IRA. He has mutual funds with the same advisor. I started to do a review of why SILAC Denali was a better option for him, but he stopped me and said, "We already covered that. What do I need to sign?" I just submitted a SILAC Denali app for 100K. In the past 2 weeks, I submitted 2 1035 exchanges for F&G, 15% bonus. Jerry introduced me to us with the total premium nearly $400,000. That's the most I've done since I've been on 5Q for anywhere that matter. Thank you, Mike, Jerry, Matt, Missy, for hanging in there with me. And well, John, thanks for hanging in with us. So the one question I have for you is what changed with John here? I kind of ripped through this email, but what did he decide that finally changed? 2 things. What were those things? Michael's got it. Doing the entire 21. And does John say he nailed it and he was the best 21-point checklist presenter? No. He admits that, hey, we can all be better. I can be better. But doing the entire 21 gives the client 21 reasons to decide this guy is screwing me. What's the second thing that he did? He finally surrendered to looking at logic versus what dumbasses, pardon my French, like Susie Orman, Ken Fisher, and Dave Ramsey say. So maybe you're a Dave Ramsey fan, maybe you're a Susie Orman fan, maybe you're a Ken Fisher fan. I am not, and I'm sorry for you if you are, because please put me in a room with Dave Ramsey on a national TV. I will destroy him. Put me in a room with Susie Orman. I will destroy her. Put me in a room with Ken Fisher. I will destroy him. Anybody want to put me in a room with them on live primetime TV and we can go at it together? Who do you think is going to win? These guys are doughheads. So thanks for finally surrendering and saying, you know, I'm going to just listen to logic. And it's not because I'm a better person, I'm a better financial advisor. It's because I use logic. Use logic. What does Susie Orman tell people who are retired to put all their money into? What does Susie Orman tell people to put all their money into? It's the exact opposite of what Ken Fisher tells people into. Susie Orman says, make enough money so you have a huge pile of cash so you can put it in muni bonds. How many of your clients could have survived over the last 10, 15 years by putting your entire money into muni bonds? Ken Fisher, I've got proof after proof after proof that Ken Fisher bankrupted virtually his entire client base in 2008 because guess where they had all their money? Guess where they had all their money? In the market. And Dave Ramsey, I used to be a Dave Ramsey fan, but now guess where he tells the people to put all their money? Guess where Dave Ramsey tells people to put all their money? Into funds he has a what? Kickback from. So dudes, I'm sorry, I'm not big fans of any of these folks. Just look at the logic of what we present. Do I tell anybody to put their money into an FIA? Do I ever, with the FIA presentation, tell people to put money into an FIA? Do I ever tell people to take money out of the market? Do I ever tell people to put money into the bonds? Do I ever tell people to do anything? No. We just have them walk through the logic in their own head that I don't want to be in the market. I don't want to be in the guaranteed. I want to be in the hybrid. I want to be in the Warren Buffett option because I want the best of all worlds. So thanks. You say thanks for sticking with you, John. Thanks for sticking with us and taking a breath and finally looking at the logic of what we do. So thanks for sharing that with us, John. Last week's 5Q tape breakdown, 2 mistakes in 45 seconds. See how easy they are to fix. That's the great thing about these 5Q tape breakdowns. The things I show you there don't require a lot of work to fix them. You just need to know that you're making them. And once you know you're making them, it's easy to fix. And when you fix some of these things, your whole relationship with your clients and your prospects are going to change. So the main topic I want to talk about today is, here's how much your home insurance will rise this year according to new forecasts. I just got in Minnesota, now I understand in Florida, but in Minnesota, I just got my home insurance renewal, and I use an independent insurance dude, so he can go get me insurance with any company out there. My insurance went up 40%, 40% in 1 year. Is Minnesota the only place that's happening, guys? What's happening with climate change and all these storms and all the flooding and all the whatever? It's everywhere. Average premiums for homeowners insurance is slated, and this was written on April 10th. In this article, it said that Minnesota was only going to have a 4 or 5% increase. It ended up after this was printed, because this was printed before most people were getting their renewals. After they got the renewals, there was a heck of a lot more than 4.5. It was 10 times more than that 4.5. Average premiums for homeowners insurance are slated for yet another big increase in 2023. According to a new report, nationwide, the average cost of homeowner insurance jumped 9%, or about $150, according to a recent report. And again, that's in the small, lesser cost homes, and that's an average. So people that you work with probably have homes of greater values. That's going to have gone up. Homeowners in some states will see premiums soar much higher than that. In Florida, the most expensive state for home insurance, owners can expect to pay an average of $8,000 for premium 2023, a 66% increase over last year. And is this going to go down, guys? Is this going to go down for Florida? Is it going to go down for Minnesota? No. Cost of everything is what? Going up, and the things that are happening is happening even, weather changes happening even faster. So while the nationwide premium approaches $1,800, many states have blown past that amount according to the Insurify. The 10 most expensive states for average home insurance are above $4,000: Nebraska, Texas, Colorado, South Dakota, Kentucky, Kansas, Alabama, Louisiana, Oklahoma, Florida. And are all the other states going to stay down where they are at $1,800? Because where are tell me a state that's not being affected by wildfires. Tell me a state that's not being affected by bigger, severe windstorms, hailstorms, etc. Yeah, Michael says, no, all the same share the reinsurance. Yeah, exactly, Mark. The reinsurance is going up, and that's going to socialize the cost. So everything is going to go up. Now, why do I bring that up? Because we have a way to capitalize on that with our property casualty. So if you go to a marketing process, we're going to get into how you can use this for marketing and approaching property casualty issues, but do we talk about property casualty in our 21-point checklist? John just said covering the entire thing works. And guys, do we get paid, most of us, 99% of the guys on the system, do they get paid for talking about property casualty? No. So this is a way to look like you are a hero without actually having to do any of the work, because you're just going to make their insurance agent or help them find an insurance agent that will do the work for them. But how many people actually understand the property casualty insurance? How many people, if a major thing happened to their house, would know exactly, I know exactly how much you're going to be paid, versus how many people would be surprised at what was covered and what was not covered? Yeah, everybody's going to be surprised. So I would highly recommend making sure you're doing this property casualty part of the 21-point checklist with all of your clients. We look at the checklist, and here's what they talk about. Dwelling structure coverage, place of residence. What's the limit of your insurance? What's the loss settlement basis? And is that important, guys, nowadays with the amount homes have gone up and the replacement cost of homes? Is that important? Yeah. Other structures covered, personal property coverage, personal all perils other than hurricane for personal property coverage, accident, discharge of overflow of water or steam, aircraft. Hopefully, many of our I don't think we're going to have many aircraft, but it happens. But that's not something people generally are going to worry about. But a dog attack, yes. Explosions, yes. Falling objects. Fire, lightning, certainly. Floods, absolutely, including storm surge. Freezing, hurricane. Why is freezing important, guys? What happened in Texas a few years ago? Pipes, water pipes. And is our energy grid top-notch, durable, highly backed up infrastructure? Yeah, the ice dam too. Why are you going to think of that? No, it's very fragile. So have you seen where they've said if any of these major cities down south that are getting hit with this heat wave now, if they lose power, what will happen to those cities? Have you seen what will happen to those cities if they lose power? They think thousands of people would die. That's so, guys. Not hundreds, thousands of people would die if one of these major cities lost electrical coverage during the summer, these heat waves for more than a few days. So these are things that people need to worry about. Riot or civil commotion, Minneapolis, you need to worry about that. Sinkhole, if you're in Florida, you need to think about that. Smoke, sudden accident damage, power surges, theft, vehicles, all these different water things, sewer backup, sudden or accidental damage from plumbing, mold mediation. What is the water exclusion clause in your property? What is the day limit? And we're going to talk about this and how it affected me. Weight of ice and snow, and Mark just talked about that. Windstorm, hail. And what they're doing in Minnesota, the reason our insurance went up so much in Minnesota is because everybody decided to let the insurance company, because these roof scammers come by and they'll find little tiny things wrong with the roof, and then they'll say, oh, you got to replace the whole roof. And instead of the insurance company saying take a leap, they would replace the roof. So what's Lonnie saying here? Roof damage due to snow this past winter. My son's roof is going to cost $100,000 to replace, and the insurance company is only covering 2/3 of that. So that's $33,000 you're going to have to come up with. Yeah, thanks for sharing that, Lonnie. So these are things your client does not know. Are these things that they should know about their insurance? Some of these things would cost hundreds of dollars to fix, thousands, or maybe even tens of thousands. Lonnie just shared a tens of thousands to fix problem. What happens if you're kicked out of your house? Additional living expense, rental expense, debris removal, reasonable repair, storage of personal property, collapse, water main, utility breakage. So these are things that our clients do not know about. And here's the big oops that most people are not thinking about, but with the way the weather and the climate is going, they should start thinking about it now, and that is flood damage. And it can happen where you least expect it. According to federal FEMA, flooding is already the most common and costly natural disaster in the U.S. Only 1 inch of flood water in an average-sized home is capable of causing $25,000 worth of damage. Will people's typical insurance cover that flooding? Yeah, no, it's not. It's not covered. In fact, in our vacation home in Michigan, the water table went up. So we had flooding from not at the top, bright sunny skies, beautiful. The lake had risen to the point where it pushed the water table up, and we live 300 yards from the shore. We're not on the shore. 300 yards from the shore, and it pushed the water table up, and it came through our basement, causing $30,000 in damage. Guess what? That was my out of pocket. I had to pay for that. Not just, and it didn't happen to me because it happened to the people who had lived there and had relatives there for 150 years had never seen that happen before. Houses that were 150-year-olds never had water in the basement. Basements flooded. This is the kind of stuff that's happening right now. And is that stuff going to slow down? Is that type of climate change going to slow down? Does anybody believe that's going to slow down? No. So the cost of insurance is only going to go up and up and up. And even 1 inch of flood water caused that. We had way more than that. Although many assume flood damage is mainly a concern of properties located in coastal areas and floodplains, my house was not in a floodplain. It was 300 yards away from the lake. 300 yards. There were other houses that were a mile away from the lake. And it was sunny. There was no water on top of the surface. It was the water table from underneath moved up. Those things happen, and they're happening more and more often. According to the American Flood Coalition, 99% of U.S. counties have been damaged by flooding event in the past 25 years. 99% of counties have been damaged by flooding event in the past 25 years. Additionally, the Flood Insurance Program, FEMA, issued a report in 2020 titled Answers to Questions About the National Flood Insurance Program, in which it was noted that more than 40% of all of the paid flood losses from 2015 to 2019 occurred in areas outside mapped high-risk areas. Guys, 40%, almost half, were in areas outside mapped high-risk areas. How many of your clients, how many of you knew this? And certainly, how many of your clients knew this? How many would guess it was anywhere near 40% were outside high flood areas? Yeah, 0. I recently spoke with a client who had purchased a house on top of a hill in rural Pennsylvania. Convinced of the elevated location of her home. This is from this article, okay, from the guy who wrote this article. Oops. Goodness sakes, Mike. I recently spoke with a client who had purchased a house on top of a hill in rural Pennsylvania. Convinced that the elevated location of her home made it impervious to water damage, she didn't even consider the prospect of investing in flood insurance. Sure enough, after a rainstorm built up enough hydrostatic pressure in the soil around the foundation to cause significant flooding in the basement, the client disclosed to me how the event led to the change in her perceptions. If you would have told me when I purchased this house that I needed flood insurance, I would have found another agent thinking you were trying to sell me coverage I didn't need. Guys, here's the thing. This is an important statement that she said. If you had told me when I purchased this house I needed flood insurance, I would have found another agent thinking you were trying to sell me coverage I didn't need. Why is that important for us to know, guys? Why is that important for us to know? And how can we leverage it? Do insurance, we don't sell flood insurance. Absolutely, Nick, I agree with that. Here's the thing. The reason most insurance agents don't fully cover their clients is what? They're afraid of being a consultant, because by being a consultant, the client will think that they're what? Trying to sell them more insurance and may look for another insurance agent. So how can we capitalize on that? We can actually sell that insurance for them because we don't get paid. And also, are we better at, especially if you're using motivational interviewing and the skills we teach you, are we better at having a client understand for themselves on why they need something versus us telling, selling, preaching, or teaching? How many property casualty agents do you think are very good at motivational interviewing? 0. Because if they're good at motivational interviewing, would they be selling property casualties? No, they'd be selling high profit items. Understanding coverage. Since typical homeowners, renters, and owners do not cover flood damage, only flood insurance can give policyholders the peace of mind and financial assistance to get back on their feet quickly after sustaining home damage. The problem and opportunity for insurance professionals is that there are still many misconceptions about what is covered as part of the home most likely to flood, the basement. So if we're talking to clients about flood insurance, why would they not get mad at us? Somebody already told us we don't sell it. That's why. There's no vested interest in it. The National Flood Insurance Program defines a basement as any area of building with a floor that is below the natural ground level in all sizes, otherwise it's considered the first floor. Rooms that are not fully below ground level, such as a sunken living room, cross spaces, and lower levels of split buildings, may still be considered basements for the lowest floor on all ground sides. So the following items are covered in the flood insurance program: sump pumps, wells, tanks, pumps, cisterns, oil tanks, oil in them, natural gas, etc. Pumps or tanks using conjunction with solar energy. Furnaces, water heaters, air conditioners, heat pumps, circuit breaker boxes, electrical junctions, foundation elements, stairways, staircases, elevators, dumbwaiters, unpainted drywall and ceilings, including fiberglass insulation. This is an important, unpainted drywall. Will the flood insurance cover and have you be able to rebuild your basement back to its beautiful self again? No. It's only going to get you back to your basics. But getting the unpainted drywall, ceilings, and back into place is a huge thing, because then you can actually paint and stuff yourself. Cleanup, which can include pumping out trapped flood water. This was a huge cost for me, pumping out the trapped flood water and getting new sump pumps in, etc. Labor to remove and extract spent cleaning solutions, treatment of mold, mildew, structural drying of salvageable interior foundation elements. In addition to the items included under the flood program's coverage, washers, dryers, as well as freezers and food items that were covered in provisions. Just as important as the items in the flood insurance program are the items it doesn't cover. So exclusions are basement improvements. So it did not pay for me to bring the basement back to its beautiful self anymore. Items not necessary to make the home safe, sanitary, and functional, such as carpeting, finished walls, painted floors, ceilings, furniture, personal belongings kept in the basement. Items not specifically listed in the flood owner's insurance policy was not covered, and neither is the removal of non-covered building or personal property items, even if the removal helps facilitate cleanup of the building. So again, these are things that most homeowners don't know. The quote I said before, where the lady said, if you told me when I purchased this house and I needed flood insurance, I would have found another agent. Think you're trying to sell me coverage I didn't need. The takeaway that this agent has is, from that exchange is from increasing the amount of data on elevated flooding risk is the flood insurance should be part of the discussion for every client and prospect, regardless of location or the perceived lack of need. And we can do that. We can do that for the property casualty agent, okay? And we have a system where you can actually leverage that. So if I can get out here. So under marketing, low-cost marketing, we have the property casualty system. And actually, remember, I brought this system up where you can actually use it for health insurance agents too, but we're going to talk about how we can use it as a property casualty agent today. So if I get back here, we'll go down here. So in the manual, if I can bring this up here. Who to approach? So guys, who would we approach to network with as a property casualty agent? It has to be an independent. It has to be an independent. It has to be an independent. Why? Yes. First of all, they're going to get our clients the best deal. Second of all, is Farmers Insurance has Farmers, State Farm, etc. all have their own financial advisors they're going to refer to. They're not going to refer to you. Call the property casualty agent. So we actually have a script for you to use to call the property casualty agent. And what we're going to leverage is, guys, when you turn on the TV, how many insurance commercials are there with Geico, Progressive, Liberty Mutual? How many are on there? See, we're under attack by Ken Fisher. We're under attack by Schwab. We're under attack by all sorts of people, entities saying, hey, we can do this financial advice cheaper for you. Guess who else is getting attacked? Insurance agent, property casualty insurance agents. So we're saying, hey, have you experienced this? We have. I'll give you an example. I call when my property casualty agent, I have a very good one, called me and said, I need to let you know your property casualty agent, or your home insurance going up by 40%. We started to talk about this a little bit. He was saying that he had a business owner here where I live, in the town I live, big business owner, very wealthy, and they were buying a couple of vans, and they wanted to insure those for umbrella, so they wanted a quote on that. So as he was quoting, he wanted to know, well, how much liability insurance do you have totally? Well, this lady only had $100,000 of liability on personally. So she was worried about her company. She was worried about her company not having enough liability. She only had $100,000 of liability on her personal car insurance. And guess who she had the car insurance with? Geico. So does Geico try to counsel you? Or, I mean, first of all, how bright is that for somebody as rich as this lady to have only $100,000 worth of liability on her? She didn't even have $350,000 liability, which is typical. She had way less than the typical. Extremely bad. She's worried about her company vans, but only has $100,000 on herself. So that's bad. So even smart, huge business people are doing what? Going and getting consultation on property casualty, or trying to do it themselves the cheapest way possible. So this is important. Do you think my insurance agent is the only one that has a story like that? And these insurance agents would love to have you hand them a bunch of clients, or wouldn't love to have you hand them a bunch of clients. They'd love to have you hand them a bunch of clients. Now, obviously, it's going to be a quid pro quo. We want to get in front of their clients as well. So you can also send, we have an email here. You can send that as well. In the email, we give a link. If we go here to a video I did explaining to a property casualty agent why they need to be looking at working with people like us. And we go through the fact that they're dying a death of 1,000 cuts. Why are they dying a death of 1,000 cuts? Are all their clients leaving them right now for Progressive or Geico or Liberty Mutual? No, they lose what? A few every month. But they have less people coming in, and they're constantly losing people. What's going to happen to the average property casualty agent sooner rather than later? So you can actually send the email. Oops, go back to the manual here somewhere. Shoot. There we go. Bring it back up. Sorry about that, guys. So we can either call them, which is preferred, or send an email with a link to that video, explain to them why they need it. And do you think that's going to ring true with them, the fact that they're losing clients to other entities like Liberty Mutual, Progressive? I mean, what happens to you every time you see a Ken Fisher commercial on TV, or a Schwab talking about how cheap they are, whatever, E-Trade? What do you think? I mean, are you happy to see that, or is it a little gut punch to you? You happy to see that, or is it a little gut punch to you? It's a little gut punch. So guess how many times they're getting gut punches every time they turn on the TV set? What you should say at the face-to-face meetings. I mean, I've mapped this out exactly what to do face-to-face. So you're looking for getting in front of them. Then what you want to do is talk about, you're going to refer clients to them, and then you want to provide value to them. Why do we want to provide value? What's the pitch we're making on providing value to them and their clients? When you open up a bank account, I want to open up a savings account at a bank. I open up a savings account at a bank. What are they going to do? Just open up that savings account? What are they going to do other than that? That's right, Larry. They're going to cross-sell. They're going to want to get me to open up a credit card. They're going to want me to open a checking account. They want me to open a high yield. They want to talk about whether I want to look at refinancing my mortgage. They want to cross-sell. And why do they want to cross-sell, Larry? What does all the research show us about cross-selling? Yeah, it'll increase profits, but they're more worried about what? When they cross-sell somebody, and I've got 5 different relationships with that bank, what am I less likely to do? Yeah, better retention, Michael, exactly. I'm less likely to leave. And property casualty agents, are they awesome hunters, or are they more gatherers? Are they hunters, or are they gatherers? They're gatherers. They want to keep the clients that they have. They're not great at finding new ones. They want to build the client base and keep the ones that they have now. So we're talking the language that they completely understand. So we're showing them how we can provide value to their clients, and we're saying we're going to want you to provide value to our clients. Wow, how can they provide value to our clients? I ended up saving $2,000 in my year on my home and auto insurance after 3 years of having with State Farm, because I was too dang lazy to shop it out. Why was I too lazy to shop it out? It actually ended up only taking me 15 minutes, but that's $6,000. It cost me $6,000 because I was too lazy to spend 15 minutes sending my title page to the insurance agent to give me a apples for apples comparison. So what can we do for our clients? And the reason I didn't do it, I didn't know it was going to take 15 minutes. Guess what I thought it was going to take? Way longer than that. It's like, just like when you look at your garage that needs to be cleaned, and you've been looking at it for 3 months, and when you finally sit down and do it, does it take that long to clean it? No. So what could we do for our clients? How many clients have an unbelievably great relationship with their property casualty agent? How many of your clients have even seen their property casualty agent? So are they going to be okay with you doing the work of finding them better insurance if you made that offer? So what you could say is, listen, here's what I'm going to do. Here's what I'm going to do. I'm not going to give your name. I'm not going to give your address. I'm not going to give your contact information. They're not even going to know who this is for. I'm just going to shop this around for you. Are you okay with that? Because I'll send it out to several different companies, and we'll get you the cheapest. I don't sell it. I don't care what you do with it. But would you like to know if you could save $500, $1,500, $1,000, $2,000, $3,000? Would you like to know that? You wouldn't have to do it then. If it's with a company you've never heard of before, a company you don't trust, you wouldn't do it. But should you know that? Otherwise, that money is going where? Right down the tubes. Would you like to do that? Now, will all clients say yes? No, they won't. But will a lot of them say, yeah, if you do that work, I would be really interested in that. Would you be interested in it, guys? Or somebody else to do all the work for you? So I got one, sure. How about you guys? Got another one? Of course, yeah, y'all would be. So when you make that offer, that's a way for you to send it to these independent property casualty agents. So it's a quid pro quo. I'm going to send you clients, and then let me help you keep the clients you already have by doing these non-financial things, doing a 21 Light seminar for them, or focus group for them. Does that make sense? So we have all this. We have it all mapped out. How to do a lunch and learn for their clients, numbers for the P&C to chew on. Property casualty agents cost $47 to do the mailing because they don't want to give you their list, right? So $47 to do the mailing, and heck, you'll even reimburse them if they want. 100 mailers sent to invite their clients to a lunch and short presentation. 6 households registered to attend. 4 households wish to meet with you. Share the property casualty agent slides, what the due agents want, what means in real number slides. So we have the whole kit and caboodle, the letter, the scripts, all of that stuff for you in this, as well as, if I get back here, get out of the manual, invite. We actually have the invite, the client letter, the checklist, the reference slides for the agent to use, P&C email. And again, it costs you nothing. And I've talked about this many times. You can make your own luck. How do you make your own luck? How can somebody who's not lucky become lucky? What have they found? The number one characteristic of a lucky person? It's not being optimistic. There are people who are not optimistic who are still lucky. What's the number one thing that causes people to be lucky? Not work, not action. Nope. Nick's got it. Anybody else got it? Not persistence. So all these things are important. Work is important. Action is important. Persistence is important. Care, consistency. Those are all very important things. They have nothing to do. They have nothing to do with becoming luckier, though. What they found, the one characteristic of lucky people is the more people they know, the more people they have access to, the luckier they are. So think about that, guys. What's the likelihood you're going to get offered tickets to your local football, to your state's football team or your favorite football team if you know nobody versus if you know 100 people? What's the likelihood you're going to be invited to go on a trip on a luxury boat on a lake near you if you know nobody versus if you know 100 people? The more people you know, the luckier you get. lucky to find jobs, lucky to get invited to parties, lucky to get find opportunities. The more people you know, the luckier you get. That's what they found, the number one characteristic, and they could make people lucky. If people did not have a lot of connections, but then over the next year, they joined a lot of groups, got to know a lot of people, guess what happened to their luck over that year? By the end of the year, they said they were much more lucky, and they had nothing to do. They did not know why, but that was because they got to know more people. So, are we getting to know more people if we start to network with a couple of independent property and casualty agents? 2 for sure, because we got 2 more people, but we also get access to what? Some of their clients in that exposure. And we're helping our clients as well. Does that make sense? So if you don't have any marketing going on, and guys, should I give up? Because remember, property casualty agents are gatherers, they're not hunters. So they're not all super hungry. So should I give up on the first time I get somebody who ghosts me on this idea? No. So some of these things that you did tell me when I said how you make more lucky, working, action, consistency, persistence, yes, that's what you have to do to make sure one of these property casualty agents will follow through on this. Does that make sense? Cool. So if you're not doing anything for marketing right now or into the fall, guess what I would highly recommend? For both your advantage, the property casualty agent's advantage, your client's advantage, and their client's benefits, I would highly recommend you look at doing this. It's a great way to network. And again, you can do the same thing with health insurance, et cetera, as well. Make sense? Coolio. So I have 20 minutes to the hour. We're going to go ahead and reconvene for the script call. Again, what we'll talk about probably more is about this idea of the property casualty agents for a little bit and answer any questions you have, but we'll get started with that at 1/4 to the hour. Thanks. Was this an idea, guys? Has this stirred some interest in you on possibly approaching people in your professionals, your property casualty professionals in your area? I hope it did. Awesome. Good. You guys have a great, if you're not going to be on the call, have a great rest of the week. We'll talk to you all next Monday. Otherwise, those will be on that call. I'll talk to you in about 5 minutes.
And I'm
Thanks
just going to
everybody.
jump in
Somebody
really
wants
quick.
Yeah, please.
I'm just going to jump in real quick. And Larry, I'm not sure if you're asking how do I do that, meaning get on the call, the scripts call. The best way to do it, go out to the website and right on our call page, there's a link to the
Okay, wait. Where?
Oops, sorry.
So I got it up. So where should I go?
Click the here. And then right there in the second section, right there, the link right below there, click here to join the weekly scripts workshop online meeting. That's actually going to open up the link to the scripts call. It comes via email as well every Monday morning to you. So I'm not sure if you're getting those emails or not. But Larry, if that's the question that you're looking for, hopefully that answered it for you. And feel free to give our office a call if you're not getting those emails. Maybe we can track down why those aren't coming to you as well. So maybe they're stuck in spam somewhere. So perfect. Thanks, Larry. I just want to make sure that we got that resolved. So, okay, so perfect.
Super.
Everyone, we'll see you on the scripts call here in 5 minutes.
Thanks, everybody. Bye-bye.
Bye.